As the threat of an all-out trade war looms, we take a look at the possible ramifications if it escalates from a war of words. I spoke with David Dodwell, Executive Director of the Hong Kong APEC Trade Policy Group, and Dwyfor Evans, State Street's head of APAC Macro Strategy, to get their thoughts on the situation.
I think China is very serious. We're very serious. We have no choice but to be very serious.
中国扩大开放，不受外界干扰，外界也干扰不了。
There can be
U.S. President Donald Trump is demanding a level playing field for American companies doing business with their Chinese counterparts, saying the Chinese have an unfair advantage. It's no secret China wants to build its industries into global competitors, specifically the technology sector with its Made in China 2025 campaign. It seems this is Trump's rallying cry for a trade war. What started with the U.S. imposing 25% tariffs on steel and 10% on aluminum in March has spiraled into the U.S. formally proposing tariffs on $50 billion worth of Chinese products, including flat-screen TVs, medical devices, and aircraft parts. Days later, China has levied tariffs of up to 25% on 128 American products, including wine, pork, pipes, and soybeans. They are proposing another $50 billion in tariffs on other U.S. products. Trump is considering additional tariffs on $100 billion worth of Chinese goods. Now, China is refusing to discuss President Trump's two toughest trade demands with U.S. envoys this week: a mandatory $100 billion cut in America's $375 billion annual trade deficit with China, and curbs on Beijing's $300 billion plan to bankroll the country's industrial upgrade into advanced technologies like artificial intelligence and semiconductors. China exports more to the U.S. than the U.S. exports to China, which means that the U.S. has more to play with. Does China have any other weapons in its arsenal, so to speak, when it comes to a potential trade war?
Well, obviously, China is one of the largest holders of U.S. treasuries globally. This has always been regarded as the nuclear option. That, for example, if the Chinese were to suddenly dump their stock of US treasuries, wouldn't that teach the Americans a lesson or two? But actually, in a way, that they would be shooting themselves in the foot as well, to the extent that they would be running capital losses. And that's something that the Chinese have been arguing vehemently against for a number of years, that they want to see their overseas investments well looked after. They would also be putting pressure on the currency as well, and the domestic currency as well.
Could they also do what they did to Korea and Japan in the past, get consumers to boycott American goods?
We're talking visible trade, not trading goods, not services. Trump may be worrying about, $13 billion worth of soya exports, but tourism revenues to the US are $290 billion. China only needs to stop issuing visas or make it much harder to get tourist visas to the US for a very large part of the US tourist industry to be hurt badly. Nobody's measuring that kind of thing. So there's some very naive arithmetic being thrown around on the merits of this.
A lot of the goods that are exported from China originate from elsewhere, and then they're assembled in China. So it's not as if the U.S. can really just target China.
Thailand would lose 11% of its exports and Indonesia 13% of its exports if the present proposed tariff increases were imposed on China. The US is very much more heavily reliant on either primary products like beef or soya or corn or aircraft, or products that are actually made at home and exported as a finished good. It is quite quite easy to target Boeing or to target soya or to target beef, and you're not hurting anybody else. You're just immediately hitting a very specific community in the States. Targeting China, for the reasons you already outlined, is much tougher because of the distributed and interconnected nature of production chains across this part of the world.
And how does this affect markets and industries once you take into account all these other countries that are affected?
One of the things over the last couple of years that has given markets a slightly bullish view on Asia is that the global economy is clearly recovering. So, that's been a positive story for regional markets. It's been a positive story for regional earnings growth and regional equity markets. And then, of course, you suddenly have this potential trigger whereby suddenly the export environment changes.
The U.S. recently targeted steel and aluminum. Is that something that China is moving away from anyway?
This is now a longer-term trend that we're seeing in China. We are moving up the value chain, as it were. It's hurting the Chinese here seemingly on products that were yesterday's priorities rather than tomorrow's priorities.
If these tariffs actually get passed, does anyone actually win in a trade war?
The irony is, of course, that Trump is arguably doing this for his base. But his base, as the US consumer, are going to be the victims here if they suddenly have to pay higher prices at the shopping mall, the supermarket. Has a knock-on impact in terms of lending and borrowing costs, mortgage costs, etc., as yields rise. So there's always a fallout in terms of this type of sort of economic activity.
Do you think countries will take sides?
Countries, realistically, their political objective from here is to look as neutral as possible and really play one side off against the other and not be seen to take sides.
I looked recently at the top 20 largest trading nations and the 21 APEC economies. China is number one as a trading partner, both an importer and exporter, for a significant majority of both categories. The practical reality is that if forced to make a choice, there are a lot of economies across the world that have more at stake in China than they do in the US.
How would Hong Kong be affected by a trade war?
Hong Kong is a manager of flows around the region, and if flows decline, it doesn't matter how strong your institutions are here, revenues collapse. And I think they would do in the event of a proper trade war where we are responsible for the management of a very large share of the flows. A large impact is almost certain in Hong Kong, much larger, ironically, than on the mainland.
Do you think that eventually China, maybe in 10 years, 15 years, will become the world's largest importer?
It's perfectly possible. As China's middle classes grow and end consumption inside China grows along with it, even though they're bringing more high value-added activity into the country, as they consume more, they're still going to need to import low value-added components and so on. In net terms, current measures, China is likely to be the largest single source of exports and destination for import.
Do you think that this trade war will actually happen, or will it just stay in the realm of words for now?
It's the first step in negotiation tactics. You don't really expect this to progress without there being some sort of political dialogue next.
We would pay a high price if the rhetoric of today were to become embedded in the policy of tomorrow. The one encouragement is that China has recognized that its best interests are based on a multilateral approach. And so, ironically, they are likely to become the primary champions of multilateralism going forward if the mood music doesn't change in the United States.
Thank you, David and Dwyfor.